Perhaps traders developing cold feet. It's also expiry tomorrow. What do you think of the action?
Well, I think it has been volatile, and we have seen the last being the last trading day of the year, as well as the expiry coming up. Volumes were a bit muted. So given that weak volumes, you are likely to see a bit more volatility going forward, and maybe real investment will start coming in only post the new year.
Speaking of investment, today's fund flow picture is quite interesting. We should pull up that graphic because, surprise, surprise, FIIs have turned into net buyers. It's not a big figure at all, but we still have a buy figure, over 150 crores. That's the amount that they've bought. Domestic institutions, interestingly, have been on the sell side. They've sold stocks worth 74 crore rupees in today's trading action. You were talking about fund flows, Lancelot. Are you expecting a significant reversal of this trend? FIIs have been fleeing this market all through this year and particularly in the last month.
Yeah, I think it's difficult to say whether this reversal of this trend will come in. One has to closely watch interest movements in the US and what's happening to bond yields over there, and that could give an indication as to whether there's still more money to move out. We could also see some amount of money moving out if China starts to weaken again, because there is a move that there could be a further devaluation on the yuan side. So that could again trigger off a knee-jerk reaction for movement. So fund flows are going to be a little volatile at this point of time. I think it's very difficult to say that there'll be a reversal of trend and you'll see money coming in. But yes, I think there will be long-only investors who have stayed in this market. They would look at lower levels to sort of bring in money to build on the opportunities that they've already invested in. So that could, ease the market. The other side is that we've seen domestic flows being fairly strong. So given that we will see that trend continue, I think the downside for the market is going to be limited from these levels.
But what about the upside? Every time we run into 79.50, max 79.80, we get into this congestion zone. Is this the cap for the near term then?
I think it is going to be a cap for the near term, given that the economic recovery is very narrow. It's happening in a few sectors that we've been seeing. We are seeing traction in the railways, we are seeing it in the road sector, you're seeing it maybe in the defense sector. But that's fairly narrow compared to an overall recovery that we need to see to move corporate performances up and justify the higher earnings momentum, and that would then start bringing in fresh money at those levels. So given that recovery has been extremely narrow, I think we'll need to see more action happening on the other companies. Maybe we did see some improvement on the automobile sector, especially the two-wheeler segment. So with low commodity prices, if earnings begin to improve in this next quarter, that would start building in action in additional sectors. Sure. And as the sector diversification of improving sectors grows, then you'll start seeing corporates starting to build up capacity.
Sure. I just very quickly want to touch upon banks, and maybe we can pull up some of those stocks once again. They've anyway been the worst performers of the year, whether you're picking up an Axis Bank or a State Bank of India, doesn't matter. Banks haven't done well. There is still a lot of concern on whether provisioning will increase from here on. And we're seeing that play out. I mean, the manner in which the Bank Nifty fell, even today for that matter. What's your advice as we're entering into the earnings season? Well,
I think what you said is very true, that we have seen banks sell off on the back of very low growth on the loans side. Advances growth has been low, and we've seen high NPAs, which a combination of which really doesn't augur well for banking stocks. But at the end of the last quarter, we did see some improvement in some of the banks as far as the restructured loans is concerned. So going forward, if we see this trend of restructured loans tapering off, that could sort of bring in the a sense that from now onwards the NPA situation is going to be under control, and with the economy then starting to improve, credit growth could start to pick up. I think initially the consumer credit growth will pick up first, and thereafter it will be driven by corporate loans. So we may see with a time lag of maybe 6 months, but banking sector could be the dark horse going forward in 2016, where if you look at really strong banks and you pick up banks which are very focused in consumer loans, etc., you could be able to generate outperformance in those banking stocks.
So play the underdog. That seems to be the advice on banks. On that note, let's bring you up to speed with all the mid-cap action. There was plenty